Okay, banks and insurance. So BFSI is your best bet right now. But let's talk about Maruti. Declared their Q4 numbers. Margins were a miss. The stock is down 1.5%. Sudarshan joins in with the fine print.
So it's a mixed set of earnings from Maruti as far as profit and revenue are concerned. Those numbers have come slightly below estimates, but margin has come in at 10.5% against our expectation of 12%. And company has given reasons, and because of expenses have increased, and three parts of expenses, if I can talk. First one is material cost. It has risen both sequentially and year-on-year. It was up 6% sequentially, 1% year-on-year. Employee expenses were up 15% year-on-year and 2% sequentially, and other expenses have increased 14% year-on-year and 13% sequentially. So if you accumulate all these have impacted margin by 230 basis points. Now, material cost impact on margin was by 90 basis points, employee cost impacted by 30 basis points, and other expenses impact were of 110 basis points. So what all a company has included in other expenses? It has mentioned first, new plant-related expenses, second, higher sales promotion or ad expenses, and third, higher manufacturing overhead expenses. So these have come in other expenses, and that has impacted margin by 110 basis points. But what was the positive in the earnings was the realization. It has improved both sequentially and year-on-year because of the price hike that company has taken, not only in Q4, but even in Q1 FY26 also it had announced price hike. But just if we talk about Q4, they had taken price hike twice, and that had impacted positively to realization, which has improved 7% year-on-year and 3% sequentially. Now, in the commentary, what exactly we'll be looking for? First, what company says on outlook, demand outlook, because recently they had attended one conference in which all the companies, including Hyundai, M&M, and Maruti, were saying that in FY26 also, PV demand growth is likely to be in low single digit. So we'll have to see if there is any update on that and what exactly company says on commodity outlook going forward.
Okay, all right, got it. Thank you very much for that, Sudarshan. So that's Maruti at the end of the quarter. That gross NPA ratio level, I think, was at 4.5% for Shriram Finance, which is down because they've taken big write-offs. And that's how that GNPA level seems to have come down, because if I remember correctly, the gross NPA levels were northwards of 5%, 5.3 thereabouts in the previous quarter in Q3. Anyway, it's an NII miss, and the market doesn't quite like that. Anand, since we are talking numbers and earnings, I mean, it's